Good morning, traders. Mark Treadway here with your Monday, November 24th Global Commodities Update. Oil markets are navigating choppy waters. Brent crude futures have eased to about $62.25 a barrel, their lowest in a month as US broker talks stoke hope for a Ukraine-Russia ceasefire. But traders, of course, remain cautious about the pace and outcome. The prospect of ending sanctions on Russian oil adds to downward pressure, with global supply far outstripping tepid demand and OPEC now staring at consecutive months of falling prices. If you're trading oil, stay nimble. This is a market waiting for clarity, and any signs of an actual peace deal could spark sharp, swift price adjustments. Best to keep positions light or hedged for either direction today. Natural gas, meanwhile, diverges. TTF European gas slid below 30 euros a megawatt hour, a new floor since 2024, thanks to robust LNG flows, milder weather forecasts, and diplomatic momentum that's easing last year's inventory fears. That said, storage in Europe sits near seasonal norms, but traders should respect the upside risk. A sudden cold snap, unexpected supply hiccup, or hard twist in talks could electrify this notoriously volatile contract. If you're active here, consider fading rallies, but keep stops tight. Copper stays steady at $5 a pound, supported by Fed dovishness and brewing supply tensions, especially as Chile ups contract premiums and Indonesian output disruptions linger. Chinese import softness hasn't dented bulls' resolve yet, but sustained pressure there could tip this market. Actionable edge: if you're trading the red metal, look for breakouts above the $5.05 resistance. Supply side stories could fuel a run, but watch for Chinese economic data for reversal. Diesel cracks tell a different tale. While crude is softening, European diesel spreads remain 8% above October's levels, pricing in continued tightness due to new EU bans on refined Russian products taking effect in January, and supply shifts as Indian and Turkish refiners respond to tightening sanctions. US refiners are set to benefit, and margin plays look attractive here. If you're in diesel, stay long until we see structural flows settle or those European inventories build. Top advice for this week's commodity action: if oil, fade big rallies as headlines, not fundamentals, dominate until a peace framework materializes. For natural gas, play June, February seasonality, but don't overcommit. Weather and geopolitics are the wild cards. And for copper, accumulate on dips, but take quick profit unless Chinese demand surprises on the upside. And lastly, for diesel, ride refining margins, favor US exporters, and monitor EU policy changes. Of course, no matter your position, Enuit's Trade ETRM solution helps you to adapt, analyze risk on the fly, and seize opportunities, turning your global volatility into your advantage. Have a great trading week ahead, and see you again next week.